Hi, good evening, everyone. Hello.
Good evening. Good evening, sir.
Good evening, sir.
Yes.
एक कंपनी दूसरी कंपनी जाओ ना
Number 7.
18
Financial.
क्या है
20% weightage for a CMA exam. Let us revise quickly the session number 6 because today's session number 7 is completely depend upon the section number 6. So if you don't know anything from these points, we will discuss again. All are important topics, important points, which will play the main role. First one, define the financial statement and explain this purpose. All of you know this. The purpose of the financial statement, remember, or if you not remember. Azam, are you there? We'll go today very peaceful and very smooth class because today we are starting the problematic area. Identify the 6 major financial statements prepared under IFRS. Vikesh, what are the 6 major financial statements?
First one is income statement, balance sheets, cash flow statement, funds flow statement, notes to the account. That's what.
Mushraf, what are the 6 major financial statements?
Financial statements, sir.
Yes, 6 major financial statements.
Yes, sir. Income statement,
Okay.
fund flow statement, then cash flow statement, notes to schedules, sir.
So please revise once again. But your preparation is only 50%. Explain the purpose of each financial statement in business decision making. Imamuddin, can you explain the purpose of each financial statement? If you know, if you don't know, no problem. If you don't know, we'll explain again. Each purpose of each financial statements. Okay. Define and prepare the income statement which we completed in the last class. Identify the major components of the income statement which we completed. Explain the purpose and the structure of the statement of financial position balance sheet. We completed. We classify the assets, liabilities, and equity equation we discussed, and define a fund flow statement and explain the concept of working capital which we discussed in the previous class, identifying the source and application of fund, difference between the funds flow statement and the cash flow statement. Understand the purpose. Understand the purpose of statement of cash flow. Explain the statement of changes in equity and retained earnings. Understand the importance of notes on accounts to financial statement. Analysis of profitability, liquidity, efficiency, and solvency using the financial ratios. So there are list of 12 to 15 topics which we covered in session number 6. And based upon that session number 6, today we'll try to solve some of the numerical part. Then we'll jump on to the different type of financial statements. Are we ready? Can we start session number 7?
Yes,
All
sir.
of you.
Yes, sir.
Yes, sir.
Please, if you people don't know anything, inform me. I will explain again. So we should not, get confused when we start the IMA material, when we'll start discussing or solving the problems. Here we'll number of times we'll explain the concepts. You need to solve the questions. The institutes, the faculties, the students who are thinking that by explaining the MCQs, the student will pass. No, by solving the number of MCQs, you will not understand the actual workflow of the financial statement. If you pass also, you will not become a professional CMA. Okay. Let us start the questions. Start questions. Prepare an income statement in accordance with IAS 1. Preparation of the financial statement from the following information for the year ended 31st December 2025. Net sales 45,000. Cost of goods sold 25,000. Operating expenses 8,100. Non-operating expenses 1,500. 50% of income tax. Mariam, I'm expecting answer from you. All the students, please send your answers in chat box. Just 1 minute time. So required to calculate gross profit, operating profit, profit before tax, income tax expenses, profit for the year. So what is the gross profit, Mushraf? You are following the statement. You are following the statement, income statement, which we discussed as per IFRS. Guys, you are preparing same as we discussed the format or roughly you are calculating? If you are calculating roughly, no use. Always try to prepare the income statement as per IAS. Okay, answer is 5,200 USD, the profit, and this is a flow, revenue, cost of goods sold, gross profit, operating expenses, operating profit, other are a non-operating expenses, profit before tax, income tax expenses, then profit for the year. First, the working notes. What is the formula? Step number 1, we need to calculate the gross profit. What is the formula for gross profit? Mariam, what is the formula? What is the formula for gross profit?
Sales minus cost of goods sold.
Very good. Sales minus cost of goods sold. So here net sales are $45, 45,000 USD, and cost of goods sold is 25,000 USD. Then your gross profit is 20,000. What is the next element? Files after gross profit. What is the next element?
Operating.
What is the step number 2?
Operating expenses.
Operating expenses.
Operating expenses. So that is called as an operating profit. Operating profit means gross profit minus operating profit, 11,900. Clear? Next, what is this after operating profit? After operating profit, what is the next element, Mushraf? Mushraf, what is the next element?
Net income.
Net income, Ram. Azam, are you there? Mamuddin, what is the next element after operating profit? What is this after this, Mariam? After operating profit, what is the next element? Mariam,
Yes, sir.
after this what? After operating profit, what is the next element of income statement? Okay.
Finance
So
cost minus
profit before
profit before
tax.
tax.
Profit before tax. Operating profit minus non-operating expenses. After this element, what is the element 5? Gross profit, operating profit, profit before tax. Next,
Finance cost
What
will be there. Interest will be there. And
element name, profit before tax. After that, what is the element? Income tax
Income tax.
expense. Profit before tax multiplied by rate 50%, 5,000. Okay, 200. So net profit after tax is 5,200 USD. So this is the method of preparing the income statement. Revenue, that is net sales 45,000, less cost of goods sold 25,000, gross profit 20,000, less operating expenses. Then you will get an operating profit, less non-operating expenses, profit before tax, less income tax. Then you will get a profit for the year, or net profit after tax. Clear, all of you? Any doubts? Any doubts?
No, sir.
What happened? Faiz, Mushraf, Imamuddin, Mohammad, Mariam? No response.
Clear, sir.
So let's continue
Yes,
the
yes,
class.
sir.
Everyone
Yes.
is tired or busy. So today we'll hold the class. When you people have energy, let me know. I will take the class on that day. If you people will participate, the classes will go very interesting. This is not one-way classes. These are the two-way classes. So if you people are ready, then I will continue the class. If you people are keep silent, no meaning of taking the classes and working on. क्या करना है? Mushraf, shall we stop? Okay. See you in the next class.
Sir, no, sir, I can continue, sir.
So we need response.
Yes.
Imamuddin, you need the class or no? Azam,
Yes, sir. Yes, sir. Continue, sir.
फिर कहाँ है?
yes, sir, you can continue.
Now the case study. ABC Electronic LLC is a retail of consumer electronics during the year ended 31st December 2025. 31st December
2025.
company reported the following. Revenue 600,000, cost of goods sold 360, selling expenses 45,000, administrative expenses 20,000, interest expenses 10,000, and income tax rate is 25%. So it required to prepare a statement of profit and loss account in accordance with IAS 1 and calculate the gross profit, operating profit, profit before tax, income tax expenses, and profit for the year. Please calculate within 1 minute, prepare the statement. Don't calculate on the calculator, write down sales, cost format, fill the format first, then put the figures, then get the answers. This is case study. First calculate, then I will show you the question number 3. What is the answer? What is the gross profit, Mushraf?
Uh, 200.
All of you, please on your cameras.
Sir, my camera is in the problem, sir. Cannot able to open.
What is the gross profit?
200,
240.
200,000, 40,000, sir.
240,000.
Yes, sir.
Azam. Guys, what is the operating profit? How much?
165,000.
Okay. Mariam, profit before tax?
They are not open.
155,000.
Yes, sir, 155,000.
Kitna?
And-
How much?
155,000.
155,000. What is
Yes.
income tax expenses? Price? What is income tax expenses? Price?
38,750.
Price? Okay, profit for the year. Azam. Profit for the year. Hope everyone calculated. Done. Everyone, all of you done. Mushraf completed the income statement. Mariam, Vikesh.
Yeah, I completed.
Done, right? Okay. So now the actual question is, is the company is profitable or no?
Yes, it is profitable.
Company is the profitable. Which expense category is highest after cost of sold? Which expense category is the highest after cost of goods sold?
Selling expenses.
Selling expenses, yes, good. Mariam, how would reducing the operating expenses affect the profit? Reducing the operating expenses affect the profit or no? How? Imamuddin, would
Yes,
how
yes,
would
sir.
the operating expenses affect your profit?
Yes, sir. This is an expenses. Like if we reduce the expenses, then our profit will increase.
How? Okay. Which expenses is classified as finance cost under IFRS? Now we have cost of goods sold, selling expenses, administrative expenses, interest expenses, income tax expenses. Which expenses will be classified as finance cost?
Interest
Interest.
expenses.
Interest expense.
Interest expense.
Interest expense.
Let's see the working notes. Step number 1, we calculated the gross profit. All of you got the same gross profit, 240. Yes.
Yes.
And operating expenses, selling expenses plus administration expenses, 75,000. Operating profit is 165,000, right or wrong?
Yes.
Very good. Profit before tax, 155. Income tax, 25% of the profit before tax, 38,758. Rikesh, you got the income tax same?
Yeah.
Very good. Profit for the year. Profit for the year ending. Profit before tax minus income tax, 111,625. So this is the format. Revenue minus cost of goods sold. You will get a gross profit minus selling expenses minus administrative expenses. You will get an operating profit less finance cost, then less income tax. You will get the profit for the year. All of you, the format. No shortcuts. For every problem, you need to complete the template. Okay, is the company profitable? Yes. ABC Electronic LLC earned the profit for the year 116,250. 116,250. Next question is, which expense category is the highest cost of after goods sold? 45,000. Selling and expenses is the highest expense. Third one, how would reduce the operating expenses affect the profit? Reducing selling and administration expenses will increase operating profit, profit before tax, profit for the year. How? Right? Imamuddin, you got the right answer.
Yes, yes, sir.
Which expenses is classified as a finance cost under IFRS? Interest expense of 10,000 is the classification as a finance cost. Slowly we are getting perfect in the financial preparation of the financial statements. CMA is not the syllabus preparation of the financial statement. You need to financial statement. So slowly we are preparing. Yesterday in previous class we discussed the structure. Today we are trying to prepare a financial statement. We will do the analysis part. Case study 2, XYZ fashion stores experience a decline in the profitability despite increase in sales. क्या हुआ यहाँ पे XYZ fashion stores experience a decline in the profitability despite increase in sales. That means the sales are increased, but profit is decreased. Revenue year 1 400,000, revenue year 2 460,000. So the sales is increased. Cost of goods sold 220, 285. Sale is increased. Cost of goods sold also increased. Operating expenses 60,000. Operating expenses 85,000. Finance cost, income tax rate is same. So first we need to understand how much profit is increased. Sale is increased, but he's saying profit is decreased. So first step number 1, we need to prepare the income statement for both the years. Income statement for both the years. Then compare the gross profit of both the years, operating profit of the both the years, net profit of the both the years. Then explain why profit decreased although sales is increased. Who will give the answer? Mariam or Mohammed? Who will give the answer? Please prepare now very quickly. Column number 1, your income statement format, sales, cost of sales. Then year 1 and year 2. Imamuddin, Azam, Faiz, Mushraf Ali, Ashraf Ali. Sleeping.
No, sir. Calculating, sir.
Very good. Done. Please give me the answer. What is the profit for the 2 years? Mariam, what is the profit for year 1?
35,000 maybe.
55,000.
35,000.
Vikesh,
35,000.
50,000. Very good. Vikesh, for year
Yeah.
2.
I'm calculating, sir.
Speed. Faiz already calculated, is ready to answer. But Faiz today is given the blood, so he's bit down. Done. No work. When we are writing the exam in 2030.
$6,640.
6,640. Mahmuddin, what is your decision? Should the management focus on increasing the sale or controlling the expenses? Explain your answer. Mahmuddin,
Yes, sir.
है आज है क्लास में है
सर कैमरे में उस
तो आंसर देना था, बिल्कुल खुशी होती थी। मोहम्मद हुसैन,
हो सर क्लास में छो
क्लास में क्वेश्चन का आंसर देना था, डिस्कस
हो सर जरा देख रो अभी कर रो अभी कैलकुलेशन कर रो
करो करो।
Difference is 64. GP
Okay.
year 1 180 and year 2 175 and operating profit 120 year 1 and year 2 90,000. Finance cost PBT 115 and 83. The tax rate 23,000 and 60,600.
Next case study 3. So for the above question, all of you, for the case study 2, all of you got the same answer. Okay, Rikesh, this one. Management wants to increase next year's profit.
Sir, previous question answer is correct, right?
All of you. What is the gross profit, Rikesh?
In second year. In
Why is
second
the
year,
question here not the gross profit, not the net profit?
in second year
The
gross
question is-
profit.
Explain why the profit decreased although the sales is increased. वो हो गया खत्म, the calculations we are perfect. How to calculate gross profit, net profit, operating profit, done. Question number 3 I want.
Because of increment of the COGS, operating
because-
expenses, and finance
Because of-
cost.
Because of operating expenses is increased, sir, comparing to previous year.
Because of operating cost is increased.
Sir, around 15,000 it got increased, sir.
So cost of goods sold is increased by 65,000. Right? Where sales are increased by 60,000, cost of goods sold increased by 65,000. है ना?
Yes, sir.
Then the cost of goods sold increased and operating expenses increased by 25,000.
25,000.
So which expense is increased abnormally?
Operating expenses.
Okay. Next question is management decision the company. Here we need a 5 suggestions action, that is increase the sales value, not the sales price. Increase the selling price, reduce the cost of goods sold, control the operating expenses, reduce the finance cost. Clear all of you?
Yes, sir.
Yes, sir.
It's clear.
So we understood the financial statement, income statement. Okay. Format of financial statements. There are two main financial statements, whereas income statement and the balance sheet can either be presented in horizontal form or a vertical form, where statutory provisions are applicable. So, in how many formats can we prepare the income statement and balance sheet? Means horizontal income statement, vertical income statement. Horizontal balance sheet, vertical balance sheet. Right? In the both the methods, the balance sheet answer will be the same. In the both the method, net profit is same. है ना? Only the presentation is changed because of the statutory requirements. The income statement, there is a no legal format for profit and loss account. Therefore, it can be presented in the traditional form, a T form, or vertical in statement form. An example of two formats is given under. So, this is the format I found it because this is very, very important format. If you try to understand, this is a manufacturing, trading, and profit and loss account, which we discussed profit and loss account. But when you CMA will come, when the CMA will come, 100% it will ask you the cost of production. So here, all of you, please listen very carefully, because as we know that gross profit will transfer to the net profit will transfer to the P&L appropriation account. From there, after dividend and after tax and after dividend, the profit will go to the owner. But here you can see two opening stocks. In our first class, we understood two businesses. One is the trading business, second one is the manufacturing business. In the trading business, we'll buy the finished product, we'll sell the finished products. In the manufacturing business, we'll buy the raw material, we'll convert, and we'll sell the finished product. So, in the manufacturing, if you see, in the manufacturing account, we have the opening stock of raw material and work in progress. The close opening stock which is there in the trading account is the not the raw material, not the work in progress. So here, first we'll prepare the manufacturing account. In the manufacturing account, we will understand the cost of the finished product. Cost of the finished product, because here no purchases. In the trading business, opening stock plus purchases, right? But here we are not buying the finished product. We are buying the raw materials. So exactly the raw material cost, can we take it as a cost of the finished product? No, because here labor is involved, labor charges, direct expenses are involved. So here how to prepare a manufacturing account? Opening stock of raw material and the work in progress 10,000 and 4,000, and purchase of raw material 40,000, and manufacturing wages, carriage inwards, other factory expenses. The total expense is 80,000. Total expense is 80,000. From this, we are deducting closing stock of raw material. Then we will get the total cost of finished goods. Total cost of finished goods. And this cost of finished goods will be carried down to the trading account debit side. So in the trading account debit side, opening stock of finished goods plus cost of finished goods minus sales minus closing stock of finished goods is called as gross. Clear, Imamuddin?
Yes, sir.
You prepared this before?
Yes, sir.
Why is it?
Yes, sir.
Why is?
Yes, sir.
Don't get confused between the opening stock of finished goods. Okay. After this, you know this. Next is the profit and loss account. You know this.
Sir,
After
the difference is the one who opening stock of finished goods, right? The
see here,
5,000.
we have very important is cost of finished goods.
Oh,
Opening stock of the finished goods, you will get it from the storekeeper.
okay.
Storekeeper will manage both the inventories, raw material cost, as well as he will manage the finished product cost. How many stock they have. Next, profit and loss account. You know this. No need to explain much. Rikesh,
Previously.
Mushraf,
Yes, sir.
Mariam,
Yes, sir.
Azam, Muhammad, Muhammad, क्या मोहम्मद भाई आप साथ में क्वेश्चन ना को पूछो मैं स्टूडेंट नहीं होता बोलते क्या This is the explanation. Manufacturing account. All costs incurred in manufacturing are recorded on the debit side. From this, we will deduct the closing stock of raw material and closing stock of work in progress. The balance is 68,000 is the cost of finished goods. Transfer to trading account. Trading
Sir.
account, profit and loss account, appropriation account, no need to discuss. I think you know this. बोलो who is this sir?
हाँ सर, नहीं अभी क्या है सर, कॉल पे था, आपको मैसेज करा मैं. विल डिस्कस
Okay.
आफ्टर क्लास सर. ओके.
Okay. Clear? Is there anything need to discuss in this slide? ABC Furniture Manufacturing Company prepare the following for the year ended 31st December 2024. Manufacturing account, trading account, profit and loss account, P&L appropriation account. All amounts are in US dollars. So manufacturing details, trading details, profit and loss account. First prepare the manufacturing account. Tell me the cost of finished goods. Tell me the cost of finished goods. Fast in 2 minutes.
ക്ലാസ്സിലാ ക്ലാസ്സിലാ ക്ലാസ്സിലാ
61,000.
ക്ലാസ്സിലാണ്.
Yes, Rikesh, you got the answer.
Yeah, 61,000.
61,000. Mustafa Ali, Ashraf Ali,
Yes, sir.
how much?
61,000, sir.
Send me the picture.
Yes, sir.
Mohyuddin. Faiz. Okay, next, prepare the trading account. Opening stock of finished goods, sales, and the closing stock of finished goods is given. So cost of finished goods, you take it from the manufacturing account. Format होना है तो चलो फिर वापस go to the previous slide. $44.
Gross profit is 44,000.
Okay, prepare the profit and loss account. Mariam, sleeping. P&L appropriation account.
So net profit is 18,000.
कितना?
18,000.
18,000 of what? Net profit?
Yeah, net profit is 18,000.
Answer, 18,000.
Fifth application.
ग्रॉस प्रॉफिट कितना बोले आप?
44,000.
Yes, gross profit is 44,000.
अगर शेयर पेनल्टी कुछ पेमेंट है तो वो करते हैं मतलब वो हम वापस ले लेते हैं.
Net profit is 22,000. Closing balance carry forward is 21,000.
वो बेटा बार बार फॉलो करना है अलग अलग फॉर्म में ना काम बन जो कर रहे हैं.
Sir, closing retained earning is 17,000.
All of you, please prepare and send me the full statement in the group. Okay. Note, the first part of the statement, the manufacturing account is prepared only by the manufacturing concerns. In such a case, all expenses pertaining to the manufacturing, including depreciation on plant and machinery used in the factory, depreciation on factory building, salaries to the works manager, etc., will be included in the manufacturing expense. Clear?
Yes sir.
So that is the name. Which format it is?
T for
T format.
Horizontal.
The T format. Next, see the vertical statement. Vertical or statement form. The vertical form can be again be prepared in two forms. Single step method. All revenues is listed in one place and total. Similarly, all expenses are listed in one place and total. The difference between the two totals gives the net profit. Vertical or statement form can be prepared in two methods. Okay. So this is a single step method format. Single step means, see, only two steps, revenue minus expenses. You can see these things in the ERPs. Okay. The sales, interest, dividend is for all incomes they recorded in 1 plus 131.3 million. All expenses, cost of goods sold, office expenses, administrative expenses, selling and distribution expenses, finance cost, provisions for tax, total is 1.1 million. So net profit is 150. So income statements can be prepared in the T form or vertical or a statement form. In the statement form or a vertical form, there are two methods. Single step method. Next one is
vertical method.
multiple step method. Multiple step method. In a multiple step method, each item of revenue and expenses is taken up step by step. Items of operating revenue and the cost of goods expenses are deducted from the gross profit, which leads to the operating profit. Financial expenses are next deductible to result in the profit before tax and is deducted to arrive the profit after tax. Lastly, the appropriation account which we prepared, which we learned. So which method we learned? Twice, which method we learned? This is the method which we discussed in the class number first class. The format of income statement, that is the sales minus sales return. All of you. Sales cost of goods sold. Cost of goods sold में Material consumed. Material consumed means opening stock plus purchases minus closing stock. Direct labor, manufacturing expenses, lard and less adjustment for change in stock. All of you know this method.
Yes, sir.
Yes, sir.
Income statements can be prepared. So here, this is the income statement for multiple step methods. So revenue, cost of sales, gross profit, other operating incomes, operating income minus operating expenses, then you will get an operating profit. Finance cost, profit before tax. Income tax expenses, profit for the year. Next is statement of profit and loss account and other comprehensive income. Net profit for the year 88,000. Other comprehensive income OCI. Gain on revaluation of profit. Foreign currency transaction gain less related income tax. Then you will get an other comprehensive income. And the total comprehensive income is profit plus 12,000. Then you need to prepare the change in equity. Opening balance 150. Profit for the year. Profit for the year 88,000. The total dividend is transferred to reserve. Closing return earning is 198,000. So after statement of change in equity, we'll calculate the return earnings. Clear all of you?
Yes, sir.
सर वो अदर कॉम्प्रिहेंसिव इनकम किधर यूज हुआ है 12,000
Sorry.
या OCI किधर यूज हुआ है सर
Closing balance of return earning will go to the owner. This will be added to the equity, right? Total equity.
सर ये टोटल कॉम्प्रिहेंसिव इनकम 1 लाख आया है ना ये किधर यूज हुआ है
The total comprehensive income. This has to be go to the profit.
उधर तो सिर्फ 88,000 यूज हुआ है बाकी 12,000
In here, yes, Imamuddin, this total comprehensive income has to go to the changes in equity or only the net profit.
Total
Imamuddin,
income,
fine.
sir.
हेलो
Five.
Yes, sir.
हेलो
Revaluation is just this one, sir. It cannot be considered as an income. Gain on revaluation of property. That means you have revaluated and you got the value, current value, but you cannot consider it as an revenue, as an income.
That's why we are
That's
not
why
taking.
it should not. Yes, it is. That's why it is not going to the income.
बैलेंस शीट में किधर गया सर फिर 12,000
12,000 will be in the balance sheet.
It will not be in the balance sheet. It will be in the notes only, footnotes.
ओके
because we did not realize it.
So if it is realized, not realized, if you remember our first class, differences between the, if you hear my corporate tax class, okay. So as per the IFRS, if you realized or not realized, you will credit to your P&L or not.
If it is realized, then we can credit to our P&L. P&L also,
Okay.
balance sheet.
No problem. Think for 1 day, 2 days, tomorrow also, inshallah, we may have class or tomorrow or day after tomorrow. Okay. We'll update. Give me the answer tomorrow. So here, the comparison between the traditional format and IFRS format. So revenue, what is the difference between the traditional format and IFRS format? Nothing. Cost of goods sold, nothing. Gross profit, nothing. Operating profit, operating expenses, nothing. Finance cost, nothing. Tax, nothing. Profit for the year, nothing. Now, dividend, transfer to reserve, surplus to balance sheet. This all and other comprehensive income is not included. By Vikesh,
Yes, sir.
got the answer.
Yeah, slowly.
Other comprehensive income is not be the part. Here in IFRS, dividend will not take. Transfer of reserves will not take. Surplus to balance sheet also will not take. If required, take. Where it will go? It will go to the
Change in the equity.
changes in
The
equity schedule. I know. It will be not the form part of income statement.
Yeah.
So now, from the following particulars related to the books of Amer Limited, prepare the income statement for the year 31st December 2025. Okay. Required to prepare the income statement vertical format, multiple step method, not a single step method. For the year ending 31st March 1995, calculate the gross profit, operating profit, profit before tax, income tax, and the net profit after tax. All of you trying, preparing. Show the appropriation of profits, including transfer to reserve, interim dividend, and the balance of retained earnings. Guys, are you doing?
Yeah. We are calculating, sir.
Mariam,
Yes, sir, David.
you need my help? Tell me, I will explain. Simple. Step number 1, calculate the gross profit. Prepare the statement. Format क्या है? Sales minus cost of goods sold. Gross profit. So this is the solution. sales 525, cost of goods sold, purchase plus direct expenses, gross profit less operating expenses. So please take the question and prepare. Once done, let me know. Then Rikesh. Guys, where are you?
Yes, I'm doing, sir.
Yeah, where you reached?
I'm calculating selling expenses for
Very
person.
good. Mushraf,
Yes, sir.
where you reached?
Sir, operating profit. Sir.
Mariam,
Finished. The closing return earning is 46,000.
what happened, Rikesh?
So closing return earning 46,000.
46,000 you got?
Closing return earning.
Mushraf,
Yes, sir.
who left the class? Before 9 now, 8.
I'm still here, sir.
Guys,
Yes, sir.
oh, done. Prepare, complete. Mohammadin, हो गया? क्या आजम भाई नाराज है क्या? आजम नाराज है? सलमान खान का और अक्षय कुमार का एक मूवी रहता, वो मूवी में कादर खान रहता है कैरेक्टर, डेली एक कैरेक्टर में रहता हूँ मैं। एक दिन गूंगा बनता, एक दिन पायलट बनता, एक दिन धोबी बनता, एक दिन शेफ बनता। तो ऐसा कुछ है क्या? नई बात करने का मन व्रत है क्या? यस, मोहम्मद हुसैन, मोहम्मद हुसैन, सब लोग आके फेस टू फेस क्लास में बैठे तो पीटा पीटा फूटने का टाइम है ये। फाट फाट पीठ पे चलेगा तो सब सही हो जाएगा।
नहीं सर, आजम को कॉल किया था मैं, वही कि भाई सर इज कॉलिंग यू, यू आर नॉट रिस्पॉन्डिंग, बट ही इज टेलिंग कुछ इशू आ रहा उनको बोल रहे, तो मैं बोला ठीक है आप लॉग आउट करके लॉग इन करो बोला।
नो प्रॉब्लम, पर जो परफॉर्मेंस दिख रहा पीटा फूटने का टाइम है। घरों में आन लेना बैठ के सीखने का टाइम नहीं है। बट्टा पट लगते रहना पीठों पर से तो जलते रहती फिर तो आंसर आता रहता ग्रास प्रॉफिट भाड़ हमारा उसी सीखा है ग्रास प्रॉफिट बोले तो हमारे पेट को जैसा हिलते रहती थोड़ा हाँ लगे सो यार done all of you completed
Yes, yes, sir.
the class is for 2 hours only you need to complete okay check your answers 46,000 right answer
Okay.
surplus carry forward to the retained earnings sales minus cost of goods sold gross profit less operating expenses selling expenses 4% of 4% of what
Sales.
sales
Yes.
Sales.
that's why 425 multiplied by 4%. So you got an operating profit. Then add other incomes. Then add interest on dividend income. Then you will get a profit before tax. Then profit tax after tax. Then the appropriation transfer to general reserve. Interim dividend you need to pay. Then the surplus can be carried forward to the retained earning or owner account. Clear, Imamuddin?
Yes, sir.
Mustafa Ali?
Yes, sir.
Faiz?
Yes, sir. Stuck in there. Income tax up to income tax. I got it correct. 74,000.
Okay.
After that, reserve
So profit after tax, 11,000, right?
T.
So come back to the question. Here, transfer to reserve,
Okay. 25,000.
dividend. The question, you need to transfer. Okay.
46.
IFRS note. Under IAS, presentation of the financial statements, transfer to general reserve and interim dividend are appropriations of profit, equity movements, not operating expense. Therefore, in IFRS financial statements, they are presented in the statement of changes in equity rather than within the income statement. So this is the income statement as per the accounting policies, procedures. But as per IFRS, this should not be form part of income statement. The transfer of general reserve and interim dividend should be the part of statement of changes in equity. Guys, learning
Yes.
something. Are you
Yes,
understanding?
I just forgot to make total. I was correct actually. 46,000.
Okay. Muhammad Hussain,
Yes, sir.
समझ में आ रहा?
जी सर.
Practice में there is
Yes,
no
sir.
any other
Practice करना पड़ता सर.
practice करना पड़ता, नींद छोड़ना पड़ता.
जी हाँ.
Imamuddin,
Yes, sir.
so Imamuddin, we are in the track of CMA or we are discussing something else?
No, sir. In the track.
Imamuddin,
On the track only, sir. Yes.
मेरी आवाज नहीं आ रही.
Yes, sir. On
हम
the track.
CMA पढ़ रहे हैं कुछ दूसरा पढ़ रहे हैं.
नहीं CMA पढ़े सर.
CMA पढ़ रहे हैं ना.
Basic, yes, basic. Start.
स्टेटमेंट बनाने आना कंपलसरी.
जी
स्टेटमेंट प्रिपेयर करने नहीं आता, सीएमए पास होके क्या करते हो?
जी जी.
ऑफिस में एमसीक्यूज करते. Concepts are the main for success of CMA. Abhi, what's going on in the market? They are selecting some materials, the questions, thousands of questions. They are explaining the method of explaining. When they will explain, you feel easy. But when you are going for an attempt, result is not coming because you don't know the concept. Here, now all my students knows first element is the gross profit, how we will get, right? How we will arrive the operating profit, how we will arrive the profit before tax, how we will arrive the profit after tax, and what are the appropriations. What is the return element? All of you know this or no?
Yes, sir.
Yes, sir.
Sir,
Okay. I will give you more problems to practice. These topics will make it very, interesting. Next class will be the trend analysis. Common size statements. Still, it is only an income statement. It is not a comparative statement. It is not a common size income statement. है ना? पहले इसको सीखो, then we'll understand that. What is an absolute change? That will be today itself. We'll start, inshallah. We'll discuss the concepts.
See groups of wild slime, man.
And in the next class, same like how we are practicing for the income statement. We'll practice comparative income statement, common size income statement. Okay, after that, directly we will start at CMA examination questions. This is at a mid-level. Basic class is done. The previous class is basic class. Today, the class which we are taking, we can say it's a mid-level class. Okay. Next illustration is from the following particulars, you are required to prepare an income statement of X Limited for the 2 quarters. For the 2 quarters for the year of 1995. Excellent question. Very good question. You need to prepare the income statement for both the quarters. Quarter number 1 means your structure. First column, quarter number 1, quarter number 2. Sales, the sales of the last quarter of 1994 was estimated at 250,000 USD. It has been observed that sales increased by 10% every quarter over the immediate preceding quarter. Means 250,000 multiplied by 10%, we will get 25,000. So 250,000 plus increase 10% है ना, decrease नहीं है, increase है तो plus होता. Cost of goods sold is estimated at 60% of projected sales. So quarter 1, 250 multiplied by 60%. Quarter 2, 275 multiplied by 60%. Administrative expenses are fixed 20,000 per month. Please, we are preparing the income statement per quarter. Means 20,000 per month multiplied by 3,000. And however, an increase is 10% anticipated from the second quarter. Means 60,000. Again, 10% plus करना है उसको. Not 20,000 by 10%. Selling expenses are estimated 5% of sales. Means 5% of 250,000, 5% of 275. The company currently pays the office rent of 5,000 per month. However, it has been decided to purchase the office premises by obtaining a loan of 300,000. The loan is expected to be repaid at the end of second quarter. The loan carries an interest of 20% per annum payable quarterly. The company falls under the income tax of 60%, including the surcharge. How many started preparing? All of you started preparing?
Yeah.
Yes, sir.
Imamati, question is good?
Yes, sir. Good, sir.
No. Faiz, Mustafa Ali,
Yes, sir.
Hurry up.
Good.
I will come in your dreams today, Mustafa Ali. If you not complete this problem, I will come in your dreams and I will wake you up. Sales, quarter one, 250 multiplied by 10%, 275,000. Quarter two, 275 multiplied by 10, 302,500. So let us go back to the sentence. The sales of the last quarter of 1994. The question is for first two quarters of 1995. That means 250 plus 10%. Then after 275 for 10%. Very good answer. Administrative expenses. Quarter number one, 20,000 into 3 months. Quarter number two, 60,000 plus 6% interest, 66,000. Rent expenses, 5,000 into 3 months. Quarter two, no rent. Premises are purchased by using loan. So interest expenses only in quarter two. Loan is 300,000. Rate is 20% per annum. The quarterly interest is coming 15,000. 300,000 multiplied by 20%. That is for the full year. Multiplied by 3 by 12 is 15,000. Selling expenses 275 multiplied by 5% is 305%. 60% each. Income tax, same rate. Note, loan of 300,000 is repaid at the end of quarter two. So interest is payable quarterly. So sales is Q1 and Q2. Cost of goods sold. Reading the question carefully is very, very important. Question, the first sale is given for the 1994, the last quarter. The preceding word is very, very important. If you ignore that word, your total question will go wrong. Imamuddin,
Yes, sir.
one question. What are the answers?
Yeah, sir.
कौन prepare नहीं कर रहे? Who is not preparing? Who is not in your not understanding? Clear? Can I go on to the next topic?
Yes, sir.
Vikesh, you got the answers?
थोड़ा मिस्टेक हुआ है कैलकुलेशन पे इंटरेस्ट का
Very-
कैलकुलेशन पर एनम का डाल दिया मैंने
Boys,
Yes, sir.
you solved?
Almost it was correct. Check in the question.
The mistake. The presentation, see the profit before EBITDA, PBT interest. Presentation पे बहुत ज्यादा ध्यान देना है. So this is about the income statement. Can we start the balance sheet? All of you clear the income statement, how to prepare?
यस सर
Yes, sir.
यस
Now the balance sheet. So this is as per the Companies Act 1956 Indian Act, okay? Stipulates that the balance sheet of a joint stock companies should be prepared as per the part of one of the Schedule 7(6) of the Act. However, the statement from has been emphasized by the central government is necessary for adopting the statement form. It must be noted that the format used by the formats used by the management accountant different from the vertical form of balance sheet. Management accountant means we are
टी शेप
okay.
फॉर्मेट टी फॉर्मेट
So management accountant, we are not using the vertical form of balance sheet here. The format used in is a very flexible statement where is necessary calculations can be clearly presented. For example, working capital can be shown separately as difference between the current assets and current liabilities. The purpose of the statement is to ensure that its user can grasp the essential message quickly. The three forms in which the balance sheet can be prepared are as follows. So in how many forms we created the income statements? Two. Single step, multiple step. Multiple steps again divided into
टी पार्ट
Single step. कितना steps है सीखे?
2 parts, sir.
Not forgot.
वर्टिकल
Vertical format and T form.
टी फॉर्म
बैलेंस शीट के कितने फॉर्म्स हैं? 3 फॉर्म्स. Vertical form of the balance sheet, source and application. Source and application source. Shareholder fund, share capital, reserve, loan fund, total available funds. This is called vertical form. You will use this form? No. Right? We will not use this form. We will use horizontal form of balance sheet, liabilities and assets. We have to discuss this, or you know?
We need
We
little
will
bit extra.
use form used by the management accountant is vertical form. This is horizontal form. We are using a form called vertical form. The vertical form of a statement is more convenient for the purpose of analysis of interpretation, such as, and all problems we shall be use the vertical format unless the instruction exists to contrary. However, the format used by the management accountant are different from the vertical form. The form followed by them is generally as under balance sheet, current assets, fixed assets, investments, total assets. Liabilities, current liabilities, long-term liabilities, capital and reserves, total liabilities. Current year end, the previous year. This is the format which we are using here also, right? In our day-to-day life. Prepare the practical question, position statement, management accountant format given below on the balance sheet of Silence Limited as on 31st December 1994. Now prepare this balance sheet is already tallied, but it is the T form or it is in a horizontal form. We are requesting you to prepare in a vertical form, which is used with the management accountant. Please start preparing. If you want, please write down the format, this format, assets, current assets, fixed assets, investments. Then all of you, Vikesh, Mushraf, Faiz,
Calculating.
Stuff done. Current assets 2.6 million. Fixed assets 83,000. Total assets 3.5 million. Right? You got the answer, Faiz, Vikesh, Imamuddin.
Yes, sir.
Same answer you got it? Done all of you this?
Yes, sir.
We need the break. All of you have the tea break, please. Don't sleep. Now, welcome back. All of you here?
Yes, yes, sir.
Till now, Faiz. Faiz, are you there? Faiz Venpati. Mushraf. Mushraf Ali, Ashraf Ali.
Yes, sir. I will go.
Back. Okay. Mustafa, I think Mustafa has to come back. We'll wait. Sir, are you there? Muhammadin, Muhammad.
Yes, sir.
Now we are changing the game. Okay. What is the topic name, Imamuddin?
Yes, sir.
What is the chapter name? Financial Statement Analysis. So there are two financial statements which we learn is the income statement and
Statement of
the
change in
balance sheet, the
position.
position statement.
Yeah.
What we learn, how to prepare. Okay. Now actual our syllabus in the CMA is financial statement analysis. How to analyze. Okay, are we ready? We know how
Yes,
to prepare
sir.
the financial statement, Rikesh.
Yes, sir.
So now we are going for financial statement analysis. Step 2, right? So here we will understand the definition of the financial statement analysis. Explain the objectives and importance of financial statement analysis. In the session number 6, we discussed the importance, objectives of financial statements. Now we are discussing analysis. Difference between the internal and external analysis. Distinction between the horizontal and vertical analysis. We know how to prepare a horizontal profit and loss account. We know how to prepare a vertical profit and loss account. We know horizontal balance sheet. We know vertical balance sheet. All of you know or no? If you don't know, we'll go back to the previous slides. Without knowing the statements, you cannot enjoy the class. This is not our responsibility to train you the financial statement because admission is taken for the CMA. But we are putting a lot of efforts, a lot of hard work because our objective to make you a professional CMA qualified person. You know, in the market, many qualifieds are there. They're getting the jobs, but they're losing the jobs as well. Ground is strong. If your base is strong. Okay. And identify the major methods of financial statement analysis. Methods of preparing the financial statements. Here, major methods of financial statement analysis. Apply the comparative statements. Comparative trend analysis, common size statements. Comparative income statement, comparative financial balance sheet, common size income statement, common size balance. First we understood. Now there is no doubt. how to prepare in a profit and loss account and how to prepare in a balance sheet. No doubt to all my students. Okay. Then very important is interpretation. Last two lines are very, very important. This is the beginning for CMA. These last two lines will be the beginning for CMA course. What is the financial statement analysis? Financial statement analysis is process of explaining, comparing, and interpreting of the financial statement to evaluate the financial performance and the financial position of the business. What is the financial statements? Prepared by the accountant. Now here, what is the analysis means what? Examining, comparing, interpreting the financial statements to evaluate the financial performance and financial position of the business. When come to the financial performance is the profit and loss account. Financial position is balance sheet. Mr. Ali, understanding? What is the meaning of analysis, Mr. Ali? So in the CMA, is not to prepare the financial statement. Here,
Yes, sir.
the analysis. So, what we will do in analysis, we'll examine the financial statement. We'll compare the financial statements. We'll interpret the financial statements. What we will do? Mariam, what we will do? We'll examine, we'll compare, and we'll interpret.
Yes, sir.
Tell me, three. First one, examine. Yes.
Comparing and interpreting financial statements.
Mushraf,
Yes, sir.
bolo.
Examining, comparing, and interpreting financial statement.
Guys, what is the financial statement analysis?
Is the examine and comparing and interpretation of financial statement.
Very good. Imamuddin.
This is a process to examine, comparing, and interpreting the financial statement to get the proper support in the business for the business decisions.
Mohammed.
Yes, sir. It's the process of examining, comparing, and interpreting financial statements to evaluate the financial performance and financial position of a business.
Select. Preparing the financial statement is only one step. It's only a basic thing. If you don't know that, we have to go back. There is no any other method. If you don't know how to prepare, then how can we compare? How can we interpret? When we are interpreting, what is important? I will give you the 6 to 9 points, very, very important points. Those 9 points will be the examination questions. The real value lies in analyzing and interpreting the information to support business decisions. Why to do interpretation? Why to do analysis? To support the business decision. Clear? Understood the actual meaning of financial statement analysis? मोहम्मद समझ में आया?
Yes, sir.
क्या कर रहे हैं अपन? स्टेटमेंट बनाना क्या है? ओनली फर्स्ट स्टेप है.
Yes, sir.
स्टेटमेंट बनाना इंपॉर्टेंट नहीं है. स्टेटमेंट द प्रोसेस ऑफ एग्जामिन, हाउ टू एग्जामिन द स्टेटमेंट,
Yes,
how
sir.
to compare the statement. Can we compare? Which statements will compare? How to compare? That's what we are going to discuss. Inshallah, today we'll try to understand. Today itself we'll try to understand. Okay. The definition is financial statement analysis is a systematic. The system we have to learn. System means a process. Financial statement analysis is a systematic examination and interpretation of the financial statements to evaluate an organizational profitability, liquidity, solvency, efficiency, and overall financial performance. आगे language में. Now we reach to the language, right? To evaluate the organizational profitability, liquidity, solvency, efficiency, and overall performance. What we will evaluate, Rikesh?
Yes, sir.
By analyzing, by examining, by interpreting, what we will evaluate? What we will understand?
The profit
We will
and loss,
understand the evolution of the organizational profitability.
liquidity, solvency,
Very good. Liquidity,
solvency, efficiency,
solvency. Bolo.
efficiency and overall financial performance.
Efficiency and overall financial performance. Next, Mushraf, what we will evaluate? We will evaluate the organizational
Profitability, liquidity, solvency, efficiency,
efficiency and
overall financial performance.
Mariam, what we will evaluate?
Profitability, liquidity, solvency, efficiency, and overall financial performance.
Good. Hussein,
Yes, sir. It's evaluate an organizational profitability, liquidity, solvency, efficiency, and overall financial performance.
Faiz,
Yeah, examination, interpretation of financial statement to evaluate the organizational profitability, liquidity, solvency, efficiency, and overall financial performance.
Muhyiddin, importance of the financial statement analysis. Financial statement analysis helps the user to evaluate the profitability, measures the liquidity, assess the solvency. The second words, beautiful words. Evaluate the profitability, calculation नहीं बोल रहे यहाँ पे. Evaluate the profitability, measures the liquidity, assess the solvency, analyze the operational efficiency, identify the financial strength and the weaknesses, compare the performance over the time, assist the investors in making the investment decisions, help banks to evaluate the loan applications, and support the management in planning and controlling the operations. समझ में आया कितना इंपॉर्टेंस है? Clear all of you?
Yes, sir.
How the classes are going on, Imamuddin?
Good, sir.
Muhammad,
Yes, sir.
क्लासेस सबको समझ में आ रहा?
Yes, sir.
क्या समझ में आ रहा? ये अपन क्या कर रहे? What we are doing?
Yes, sir. Yes, sir.
What
We
we
are
are
just.
trying to do. So
Yes, sir.
here, what I understood, sir, how to prepare the financial statement.
Financial statement. Yes. And how to
Then
analyze it as
now
well.
I am trying to learn how to examine, how to compare, how to evaluate.
Yes, sir.
Why you want to do this? Because
To
I
evaluate
want to evaluate the
profitability.
profitability of the organization.
Correct.
I want to measure the liquidity. I want to assess the solvency. I want to analyze the operational efficiency. Because I am a CMA qualified person. My responsibility to bring the companies up.
Correct, sir.
I have to report. What you will report? Profit and loss account. Guys, what you will report? Profit and loss account to the management.
Okay.
No, no,
sir.
no, no.
No, sir.
We will report the financial statement analysis.
Statement analysis.
Yes. Clear? Can I move forward?
Yes, sir.
Yes, sir.
Type of financial statement analysis. Financial statement analysis are two types. First one is based upon the nature of information used. Based upon the nature, information
Used.
used. Okay. Types of financial statement analysis. Types of financial statements are income statement, balance sheet, fund flow statement, cash flow statement, changes of equity, retainer, right? That is done. Now what we are discussing, type of financial statement analysis.
Yes.
Two types. One is based upon the nature of information used. That is, in this also we have two types. External analysis, internal analysis. Based upon the nature of information used. External analysis is performed using the published financial statement available to the outsiders. Published financial statements. मतलब न्यूज़पेपर में दे दिए फाइनेंशियल स्टेटमेंट्स देते क्या होता? यस, user includes investors, banks, all are external parties. Investors, banks, creditors, government agencies, financial analysis shareholders. Characteristics: use publicly available information, cannot access internal accounting records, based mainly only on annual reports and published financial statement. Reliability depends upon the quality of disclosures. Example, a bank reviews a company's published annual report before providing a loan. So first analysis is based upon the information, based upon the nature of information
Used.
used. Internal analysis क्या है? Internal analysis carried out by using the internal accounting records that are not available to the public. Users includes management, finance department, internal auditors, budgeted committees. Characteristics: use confidential information, more detailed than external analysis, helps in planning, budgeting, and performing evaluation. Example, management compares monthly production cost with the budgeted cost to control the expenses. Differences between the external and internal analysis. Basis information source published in financial statements. Newspaper में डाल दिए. Internal analysis, internal records. Users, investors, banks and creditors. In internal analysis, management is the users. Level of detail. In external analysis, will publish the financial statements, will not give any ledger summaries. But here internal analysis will give the detailed analysis. Access, public, confidential, purpose, investment and lending decisions, planning and control. Based upon the methodology analysis. First one is based upon the information,
nature of information used.
This is based upon the methodology of analysis, horizontal analysis and trend analysis. Methodology of analysis, horizontal analysis, not horizontal income statement, horizontal balance sheet, which we learned. Now we are learning the word called horizontal analysis, trend analysis. Horizontal analysis, compare the financial information over 2 or more accounting periods. Horizontal analysis means comparing the 2 or more accounting periods. Same company, comparing 24 and 25. It measures, horizontal analysis will measures growth, decline, trends, percentage changes. It also called as trend analysis. This is your syllabus. CMA starting from here, right, Imamuddin?
Yes, sir.
CMA start हो रहा है यहाँ से डायरेक्ट हॉरिजॉन्टल एनालिसिस, ट्रेंड एनालिसिस, लिक्विडिटी, सॉल्वेंसी वहां से डायरेक्ट यूज कर रहा हूं मैं. बट अल्हम्दुलिल्लाह now our all students knows what are the components of the financial statements, as per which when we are preparing the income statement, which IFRSs are required, when we are preparing the balance sheet, which IFRSs are required, how many methods we have to prepare a profit and loss account, and the manufacturing account also we learn. We learn the balance sheets, how many methods, so which we selected a management accountant method. Now we are doing the analysis. First one is based upon the nature of information used, external users and internal users. Khalivali. Second one is based upon the methodology analysis, horizontal analysis. Horizontal analysis will compare the financial information over 2 or more accounting periods. It is called, it measures the growth of the company from year to year, decline the company's profits year to year, trends, percentage changes. It also called as trend analysis. It is also called as a dynamic analysis. The formula for the trend analysis, formula for the horizontal analysis is percentage change. Percentage change, current year minus previous year divided by the previous year into multiplied by 100. What is the formula to find out the trend analysis? Trend means change. What is the percentage of change? What is the formula, Rikesh?
Percentage change in the current year minus previous
The formula क्या है?
current year
Minus previous year divided by previous year into 100. Rikesh, please repeat, write down.
current year minus previous year divided by previous year into 100.
Very good. Mushraf Ali,
Yes, sir.
Horizontal analysis, trend analysis में percentage change, what is the formula?
Current year minus previous year divided by previous year into 100.
Multiplied by 100 कौन बोलते हैं? Guys, what is the formula?
Percentage changes in the current year minus previous year divided by previous year into 100.
Mariam,
Current year minus previous year by previous year into 100.
Mohammed,
Current year minus previous year divided by previous year into 100.
Mohammed Hussain,
Current year minus previous year divided by previous year into
Imamuddin,
100.
Imamuddin, Hasan में उड़ान छल्ले की बोलो आप.
Current year minus previous years divided by previous year into 100.
Very good. So, started, Alhamdulillah, started. Okay. So, year 2024, 2025, 2 years given means which comparison we can do? We can do horizontal analysis. Means we can do trend analysis. How can we do the percentage change? So, sales is 2024 sales is 800,000. 2025 sales is 920. So, increase. Sales is increased, right?
Yes.
920 current year minus previous year. पहले क्या करना है? Current year minus previous year, how much? 120. 120 divided by previous year multiplied by 100. How much percentage of sales is increased? 15% over the previous year. Sales increased by 15% over the previous year. Compared to the last year, 15% sales are increased. How we calculated? Very simple. Current year minus previous year divided by the previous year multiplied by 100. Mariam, understood? It's easy.
Yes, sir.
Mushraf, calculate karo, देखो मत.
Yes.
Use pen and paper, write down the formula, apply the figures. करो, answer करो, do it. Do it and let me know how much change in amount and the percentage. Advantage of horizontal analysis. It identifies the growth trends, detect the declining performances, useful for forecasting, assisting the strategic planning. Assisting strategic planning. What are the limitations? Inflation may distort the comparison. Changes in accounting policies reduce the comparability, requires the multiple years of data. To prepare the trend analysis, we need to have a multiple years of data and change in accounting policies. 2024 में depreciation we used to have a diminishing balance method, but in 2025 we change it to straight line method. So difficult. If any policies are changed, we cannot compare. Inflation means the currency rate changed. Any seasonal changes. Clear? A, first B is based on the methodology of analysis. Horizontal analysis is trend analysis. Second one is vertical analysis is a common size analysis. Common size analysis is a vertical analysis and one accounting vertical analysis studies one accounting period. Each item is expressed as a percentage of base figures. each base figures. Commonly used income statement, sales always percentage basis, sales is for income common base. For income statement, the basis is sales, always 100. For balance sheet, the base is 100% total assets. So each item is expressed as a percentage of base figure. What is the base figure? When you are calculating, when you are expressing one item of income statement, cost of goods sold divided by sales, operating expenses divided by sales, sales divided by sales, interest divided by sales, tax divided by sales. When we are analyzing the vertical analysis, a common size analysis, each item will analyze by taking base as sales. Balance sheet by taking base as
Total assets.
Also called as structural analysis, static analysis. Example of the income statement. Example of income statement is what is the percentages. That is, in the trend analysis, we calculated each and every item previous year to this year. Okay. In horizontal analysis, we studied for two or more accounting periods. So this is called horizontal analysis, trend analysis. But in vertical analysis, studied one accounting period only. One accounting period, but each item. This is the difference. यहाँ क्या कर रहे हैं? 2 years को compare नहीं कर रहे. When you are comparing 2 years, horizontal trend analysis. What is the formula? Current year minus previous year divided by previous year into 100. When you are comparing one accounting period, a vertical analysis is called as a common size analysis. Okay, here what we will do, we'll take one base for income statement. The base is sales. Now sales divided by sales 100%. Cost of goods sold divided by sales 300,000 divided by 500,000 60%. Gross profit 40%. Operating profit 24%. Net profit 16%. Understood? Rikesh?
Yes, sir. Yes, sir.
Interpretation. Gross profit is equal to 40% of sales. Net profit is 60% of sales. This is commonly the people will ask, what is your percentage of GP? Advantages, easily comparison between the companies of different size. Identify the cost structure. Useful for the ratio analysis. Support the benchmarking. Support the benchmarking. Slowly we enter into the ratio analysis. From the financial statement analysis, we are moving to the ratio analysis. Limitations, limited to one accounting period, does not identify the trend over the time. Common size will not help you to understand the trend. Trend means for the different periods. Clear?
Yes, sir.
So what is the difference between the horizontal and vertical analysis? Basis comparison. Horizontal analysis will compare multiple years. Vertical analysis will compare 1 year. When horizontal analysis, the formula is to compare the multiple years are current year minus previous year divided by the previous year multiplied by 100. Whereas vertical analysis is 1 year. 1 year means when you are comparing the vertical analysis of an income statement, you need to take the base as sales 100%. Then each and every item of the income statement will be divided by the sales. When you are comparing, when you are preparing a common size or a vertical analysis for the balance sheet, for the financial position statement, you need to take each and every item of the balance sheet by divided by total assets. Even the liabilities also will be divided by total assets. Clear?
Clear, sir.
Purpose. Horizontal analysis purpose is identifying the trend. Vertical analysis is to analyze the structure. Structure analysis means, okay, we have the 40% of the gross profit, 20% of the salaries, 15% is the rent towards sales. Also known as a trend analysis, also known as a common size analysis. And nature is dynamic and static. Results, growth and decline and percentage of comparison. A website said they upload dynamic website and static websites. So we have to say that yes, we have a dynamic financial statements analysis, vertic static statement of financial analysis, growth and decline and percentage comparison. Clear? समझ में आ रही class?
Yes, sir.
Yes, sir.
Are we understanding the class what we are studying?
Yes, sir.
Yes, sir.
Methods of financial statement analysis. The following methods of analysis are generally used: comparative statements, trend analysis, common size statements, fund flow analysis, ratio analysis. How many methods of analysis are generally used? Method of financial statement analysis: comparative analysis, trend analysis, common size analysis, funds flow analysis, ratio analysis. First three methods will be discussed in this chapter. Means now in session number 7, the continuation. 7 years in the 7 chapter means statement of financial analysis. We will discuss comparative statement, trend analysis, and common size statements. And fourth is not important, right? Fund flow statement analysis is. Okay. So fifth method will be taken separately in the next chapter called ratio analysis. Okay, funds flow analysis has been separately in the other textbook, means different part. We'll understand. Clear what we are doing now? Comparative statements, trend analysis, common size statement, fund flow statements. Comparative statement analysis. Are we ready, or we can see in the next class? All of you. Now our actual syllabus is we are going to start. Okay. Comparative statement analysis. Comparative statement analysis refers to comparison of the financial statement pertaining to different periods by putting them side by side and finding out the changes in absolute and the relative changes. Comparative statement analysis means comparative income statement, comparative position statement. So what we will do, comparative analysis with the two different periods. And we will calculate the absolute change and the relative change. What we will calculate, Mariam? We will calculate, find out the change in absolute and change
Absolute
in
and relative.
relative changes. Very good. So now our focus is to prepare. So this slide is very, very important. If you understand this slide point by point, that means the chapter is closed. After that, only practice calculations, plus minus, divided by plus. The chapter is nothing but the preparing is very, very important. But CMMA, unfortunately, it will not ask you to prepare the comparative income statement or comparative balance sheet. It will ask you by taking one component of your income statement by comparing the one component only. One component means gross profit ratio, net profit ratio, one component. That's why I started my class by using the word components of financial statements, because each component can be compared, each component can be put together side by side to find out the change in absolute. So what is my request? My request is to not to learn the full statement. My request you to divide the part. We teach the statements like this only, working notes. First, we teach you step number 1, calculate gross profit. Step number 2, calculate the operating profit. Step number 3, calculate the profit before tax. Step number 4, calculate the profit after tax. Then apportionment. Same method you need to follow. That means you need to revise number of times my slides, how the slides are going, in which order I am teaching. The same order you need to follow. Okay. So points to be noted. After this we will close. Okay. The financial date that is to be compared should be properly defined. A particular accounting head must have the same question to for all period of comparison. Financial date means year. Two different periods now. So date is important. Properly defined. We are comparing which 2 years, the properly can be defined. Accounting policies followed during the year of comparison should be uniform. If there are any changes in any policy, the figure should be adjusted to ensure the uniformity. ये देखो ये danger है. One, the period should be defined. Second one, the policy should be changed. If any change in the policies should be adjusted. मतलब अपन क्या सीखे? When we are comparing the structure, the policies should be changed. It is preferably to present the financial information in vertical or a statement form. Vertical form or a statement form, which we learn: sales minus cost of sale, gross profit plus non-operative income, operating profit minus operating expenses, operating profit, non-operating expenses, वही format. Balance sheet, current assets, fixed assets, investment, total assets. The comparative financial statement must be reveal the changes in both absolute and relative measures. This is very, very important. You need to calculate the absolute change and you need to calculate the relative change. Comparative statement analysis में क्या calculate करना है guys? We have to calculate the absolute change and we have to calculate the relative change. Very important points are financial date, accounting policies, and preferably you need to have a vertical or statement form, and the comparative financial statement must reveal the changes in absolute and the relative changes. Interpretation. This is very, very important. If you're not understood today, no problem. We will understand these 9 points by solving the number of questions. Because this is a finance language, you may not understand when we are reading, but you can understand by solving the small questions. Once you understood these comparative statements, interpretations, and the common size statements, interpretations, trend analysis, ratio analysis, then you can have an CMA, you can solve your questions. I'm not going to teach you the most of the questions. My responsibility to give you the concepts, formulas, interpretation, the base. So here first what we'll interpret? First we'll interpret change in sales. A change in sales in meaningful. Change in sales is meaningful only if it is compared with a change in cost of goods sold. So one question I given, sales increased, cost of goods sold increased. When you are calculating the change in sales, the change in sales is meaningful only if it is compared with the change in cost of goods sold. Without cost of goods sold, you are comparing the sales, no use. What we are understanding here, sentence number 1, Imamuddin. Imamuddin. Rikesh,
Yes, sir.
what we are understanding the first interpretation? Change in sales it not be alone. Change in sales is meaningful only when you compare change in sales with the change in cost
Cost
of
of
goods.
goods side by side.
Clear,
Yeah.
Mariam, what we are understanding, ma? Here we are understanding change in sale
Change in sale
full
is compared with the change in cost of goods sold.
excellent. यही सीखना है अपन किसको कंपेयर करना है किसके साथ. Sales can be compared with cost of goods sold.
Cost.
Next interpretation. If you not understood today, no problem. Next class will be the starting point. This. Okay. A change in the operating expenses. A change in the operating expenses might be due to change in scale of operations, means range of operations, or on account of change in degree of managerial efficiency. Degree of managerial efficiency. Guys, when operations will change, when scale of operations will change, means last time no Google ads, this time we added Google ads, means scale of operations are increased. Because of that, changes is happened in operating expense. Before, only a junior accountant is there in the company. Now senior accountant came. Now the senior accountant came. That means the degree of financial efficiency is increased. So what I'm trying to tell here, when you are trying to do the trend interpretation towards the operating expenses, the change in operating expenses might be due to change in scale of operations or in the change in your degree of efficiency. Understood, Faiz? When operating expenses will change?
Changes in operating expenses might be due to changes scale of operation or account of change in degree of managerial efficiency.
Very good. Scale of operations may increase or decrease.
It will increase.
Yeah, if it may be increased or maybe decreased. This
Oh.
time we have the Google Ads. Next month we don't have the Google Ads.
Okay.
Okay. Point number 3. First one we understood. Change in sales meaningful when we are comparing change in the cost of goods sold. Otherwise, we cannot compare the sales in change alone.
Yes, sir.
Second one, change in operational expenses only because of change in the scale of operations or change in the managerial efficiency. Degree of change in the managerial efficiency. Third one is a change in net profit. A change in net profit is a good indicator of overall profitability of the organization. We know that net profit means profit of the business. A change in net profit is a good indicator for overall profitability of the net profit is decreased or net of profit is increased. Fourth one, a change in retained earnings. See, I'm going one by one, brother. First, I'm talking about sales, then cost of goods sold, then operating expenses, then I jumped onto the net profit. Then I'm going for the retained earnings. It is in the order, right?
Yes, sir.
Okay. So, change in the retained earnings can be on account of change in profitability. Retained earning will change when your profit will change. Or on account of change in dividend policies. Or capitalization of free reserves and change in amount of transfer to various funds. Retained earning means net profit. Opening retained earning means the net profit of the year. From the net profit of the year, retained earnings will change because the profit is changed, or we are giving the more dividend, or we are capitalizing some reserves, we are increasing the reserves. General reserve, risk reserve, or we are transferring the funds to the various funds. Because of these reasons, the change in the retained earnings may come. Because of the change in the net profit, we can understand the overall profitability of the business. The change in the operating expenses will come due to the change in scale of operations or change in degree of the managerial decisions. First one, when interpretation will do, first one, sales interpretation, I'm giving in order. The question will come for any point. First one is sales. Second one is operating expenses. Third one is net profit. After net profit, retained earnings. Then
Working
I'm
capital.
jumping onto the balance sheet.
Mm.
A change in working capital is a good indicator of change in current financial position or short-term solvency of the business. A change in working capital. Working capital means current assets minus current liabilities. So the change in working capital means we will understand the change in short-term solvency. or the change in current financial position. Current financial position in this year, not the long-term financial position, change in working capital. A change in liquid asset is a better indicator for short-term solvency of the business. Change in working capital means change in liquidity assets. Liquid assets means current assets. Same. Change in fixed assets must be balanced by a change in long-term funds. Long-term funds. A change in fixed assets, change in long-term fund. Change in current assets, change in current liabilities. First one, sales. Second one, operating expenses. Third one, net profit. Fourth one, retained earnings. Fifth one, working capital. Sixth one, liquidity assets. Seventh one, fixed assets. Income will be compared with expenses. Assets will be compared with liabilities. Very simple. The eighth one is nature of assets which have increased or decreased must be studied to understand the implication in the future. The nature of assets, the session number 2. Session number 2 of the job seekers edition. Okay, which have increased or decreased must be studied to understand the implication in the future. And the relative measures provide a sharper picture than absolute measures. Clear? Comparative statement analysis. Comparative means two different periods. Two different periods means this period minus that period. This period minus that period means here I given the 9 interpretations. In this I covered your profit and loss account and your balance sheet. Clear? सो गए क्या सब लोग? All slept?
No, sir.
No, sir.
No, sir.
No, sir.
Yes, sir.
Okay. But small question, we'll do it to just have and we'll discuss again these comparative statements will be our next topic, starting topic. Absolute change. Absolute change will come current year minus previous year.
Yes, sir.
Absolute change current year minus previous year. Percentage change means absolute change divided by previous year into 100. This is what we learned. The percentage change. Absolute change divided by the previous year into 100, which we learned, right? In the horizontal analysis, trend analysis, percentage change, current year minus previous year divided by previous year into 100. उसको क्या बोल रहे हैं अभी? We are saying it as an absolute change. Absolute change means current year minus previous. So what we have to calculate here, we need to calculate what we calculate here. Change in absolute change. Absolute change means current year minus
Previous year.
Previous year. Yeah.
percentage change. So here, for the both absolute change and relative change. So sales this year and that year, current year and the previous year. Current year is 2025, previous year is 2024. Okay, so here amount change and the percentage change. Amount change is the absolute change. In the absolute change, we'll calculate. See here, first one is interpretation of sales. Here, interpretation of sales always compared with cost of sale, which we discussed. So here sales are 600,000, power and 500,000. Increased or decreased sales? Increased. By what percentage? So the sales are increased by 20%, cost of goods will increase by 40%. What is the
40%.
formula? Current year minus previous year divided by current year into 100. For both. Means sales 20% बढ़ रहा, so expenses 40% बढ़ रहा. Interpretation, profitability has deterioration because costs are rising faster than the sales. समझे? So inshallah we will learn very clearly, okay, very professionally, the comparative statement analysis with the interpretation. Now we understood what to interpret. Now we understood. How many interpretations are there? 9. After learning, this is the 9 only. There is no more than this. These only interpretations will come in CMA examination questions. You are solving the question, you are getting the answer, you are understanding, but why? Which interpretation you are doing? Your interpretation means you are doing the changes in sales. You know the formula by heart. You can get the answer, but you cannot interpret. Okay. Inshallah, we are trying to give you a strong foundation. You will agree, guys? We are giving you the strong foundation or no?
Yes, sir.
Yes.
We started with the word card, the financial statement. Now we reach to the interpretation. Now one more day with me, the patients. We understand the comparative statement analysis and common size statement analysis and the trend analysis. In these 3 topics we discuss with the comparison, interpretation and analysis. Okay. So for today, we agreed up to 9:30, but it's 10 now. So let us continue the session, the legacy tomorrow or day after tomorrow, not the next week. Okay, I want to complete this and I want to start the CMA examination questions. Okay, thank you. Have a good night.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Good night, sir.
Thank you, sir.
Thank you. Bye. Good night.